Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for our quarterly small cap growth virtual conference. Our next presentation is from White Pearl Technology Group. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Stephen Nurkum-Thorne, Senior Vice President, AI, Data Science, and Blockchain of White Pearl Technology Group, which trades on the OTCQX Best Market under the symbol WPTGF and on the Nasdaq First North under the symbol WPTG. Welcome, Stephen.
Thank you. Thank you, Greg. Thank you very much. Good morning, good afternoon, everybody. Thank you for joining me today. I'm delighted to present White Pearl Technology Group, a company that's been delivering record-breaking financial performance while building one of the most compelling growth stories in global technology. There we go. Apologies, I forgot to move the slide. So let me start with what makes us unique. We operate 32 subsidiaries across 6 continents with a team of 800 people. We serve over 200,000 customers globally in 20 countries. But what's really interesting and what we'll explore today is we've achieved this scale with 80% organic growth, not through acquisition roll-ups. We're a global digital transformation platform operating across 5 integrated pillars, namely ERP and business process solutions, cybersecurity, big data and analytics, digital marketing, and smart infrastructure. This end-to-end approach sets us apart from fragmented point solution providers. We're a dual-listed entity. As Greg mentioned earlier, we listed on Nasdaq First North and OTCQX, giving us enhanced market access to both European and US investor bases. We work with Amadova AB as our certified advisor, and our investor relations are led by Peter Ejmeyer, who is on the call today. Peter will be the go-to person for follow-ups, and he'll be able to hopefully answer your questions and give you more insight into White Pearl as an entity and a little bit more about the investment rationale as well. The numbers are exciting, but certainly, in my opinion, the numbers that will grab your attention are our exceptional Q1 2025 results. So in terms of latest results, Q1 2025 was a watershed moment for White Pearl Technology Group. We achieved a company record 16.1% EBITDA margin, which is the highest in the history of our company, alongside an 18.1% revenue growth and an exceptional 72% earnings per share growth. Revenue hit 98.9 million SEK, which, as I said, is up 18.1% year on year, which demonstrates continued and consistent momentum. But the real story is our profitability transformation. Our EBITDA margin of 16.1% represents exceptional operational leverage. EPS, as I said, grew 72% to 0.55 SEK, and our cash position strengthened 33% to 31.5 million SEK. This reflects our strong cash generation capabilities, as well as then, as I mentioned earlier, the ability for us to grow and obviously to generate those returns. If we look at the historic margin evolution chart, which basically charts our EBITDA evolution from 9.2% EBITDA margin in 2022, climbing to 14.1% in 23, 16.3% in 2024. We're maintaining this in Q1 with 16.1%. And that's a remarkable 7.1% expansion in just 3 years, which is well above our historical target range of between 12 and 14%. So this isn't just about growth. This is about profitability. Sustainable transformation driven by our strategic pivot to higher margin AI and proprietary technology solutions. Our emerging technology segment, including our AI-powered cybersecurity platform, now represents approximately 15% of revenue with premium pricing. We've also strengthened our balance sheet with approximately 144.7 million SEK net equity, which is up about 17% versus the number in December 2024, and we maintain a conservative 0.33 debt equity ratio. So let me just show you a little bit about the remarkable multi-year journey that got us to this point. So a little bit about the growth story. White Pearl growth story in visual format, which is what the slide shows us. We've gone from 64 million SEK in 2020 to 309.7, so basically 310 million SEK in 2024. That's 4.8 times revenue multiple and a 384% total growth in just 4 years, which has been achieved primarily through organic business building. So looking at our remarkable trajectory, we started, as I said, at 64 million SEK in 2020, explosive year growth to 163 million SEK in 2021, which is about 155% growth. Then steady sustainable expansion, 221 million SEK in 2022, which is up about 36%, and then 239 million SEK in 2023, which is up about 8.4%, and then 310 million SEK in 2024, which represents a 29% improvement on the previous year. So this basically represents a 48.4% compound annual revenue growth rate from 2020 to 2024, which has been achieved primarily organically, and I'd say that's probably close to 90%. So the important thing is we didn't buy our way to the scale, we built it through internal business development, proprietary value creation, platform creation, and strategic market expansion. The 57.5% EBITDA compound annual growth rate from 2022 to 24 outpaced revenue growth, and our Q4 2024 EPS growth of 378% demonstrates exceptional earnings power. But here's what makes this truly remarkable, is this growth was achieved primarily through organic means. No acquisition dependence, no revenue roll-ups, just pure organic value creation through business building and platform development. So this exceptional track record gave us confidence to raise our already ambitious Vision 2028 targets. So this slide basically shows our Vision 2028 target. Based on our proven execution track record, we've actually raised our Vision 2028 target. Our revenue target is now 827 million SEK, which is a 18.1% increase from our original 700 million SEK target, which we believe reflects on our accelerated AI platform adoption and market expansion success. More importantly, we've raised our 2025 revenue target by 27% to 470 million SEK, which represents a 51% growth from our 2024% levels and demonstrates tremendous near-term confidence. This isn't just wishful thinking. It's based on our AI platform scaling, our North American market entry via OTCQX, and our confidence in our AI platform adoption. including continued strength in emerging markets, where we've established a leadership position, as well as then our entry into more developed markets as we push across the globe. As mentioned previously, we're currently in 6 continents, and our growth trajectory sees us pushing beyond the countries we are currently in, making inroads into further inroads into the Middle East, as well as in Latin America. So if we look at the trajectory chart, Vision 2028, it basically shows our clear path forward. So from 309.7 SEK million, which was achieved in 2024, to 470 million SEK, which is targeted for 2025, building, as I said, to 827 million SEK by 2028. This requires a 27.8% CAGR and potentially about 167% growth from 2024 to 2028. Ambitious, but we think achievable given our 48.4% historical CAGR performance and our 1 billion SEK market cap target. We're already achieving 16.1% EBITDA margins, moving towards our 17.1% target by 2028. With our AI and intellectual property strategy driving premium pricing, we see a clear path to 20% plus margins as our proprietary solutions scale. Key growth drivers including our OTCQX listing, providing US market access, strategic acquisitions we've done recently like Luminary and Newport, our AI platform scaling rapidly, and our emerging market strength continuing. Now, I'd like to explain how our evolved business model supports these elevated targets. We've deliberately evolved our revenue mix towards higher margin, more sustainable revenue streams. Managed services now represents about 40% of revenue, which is up a percentage point year on year, providing recurring, predictable income streams. Emerging tech, including our AI platforms and cybersecurity solutions, grew to approximately 15% of revenue, which is up 2 percentage points. Our system implementation represents 26%, but declined about 2 percentage points as we focus on higher margin activities. On the point of recurring revenue growth, 40% of our managed services revenue is through multi-year enterprise contracts, support and maintenance agreements, and SaaS or cloud subscriptions, which provide predictable revenue. In terms of our AI and IP platform, 15% is with emerging technologies, with proprietary AI platform scaling, premium pricing in emerging markets, and myself leading the development of our intellectual property assets, at least in this space. If we look at margin excellence, and I think this is important given the discussion we've had on the slide before on our Vision 2028, our EBITDA expanded from 9.2 to 16.1 in Q1 2025. 57.5% EBITDA CAGR from 22 to 24, and higher margin services commanding premiums and operational leverage accelerating. In terms of the strategic advantages, our geographic diversification across 30 countries with approximately 200,000 customers reduces our concentration risk. Our technology leadership through strategic investments in AI platforms, big data solutions, and intellectual property development. Our market positioning, which has been strengthened by relationship with major tech vendors, including IBM, Dell, SAP, Oracle, Microsoft, also then ensure competitive access. So this sophisticated business model serves as both an impressive and a diversified global customer base. So if we move on to look at our customer base and our market positioning. So in terms of our customer base, I mentioned earlier 200,000 customers. So currently, as I said, about 200,000 customers across 20 plus countries, which has been served through 32 strategically positioned subsidiaries across 6 continents. This diversification is crucial. It reduces our concentration risk and provides multiple growth vectors across different economic cycles and geographic regions. Just looking at some of our customers, this is a subset. As I mentioned earlier, we have over 200,000 plus customers. But we've got names I'm sure many of you will recognize: Tech Mahindra, McDonald's, for example, Mercedes-Benz. We've got government entities, including the City of Cape Town, as well as the City of Johannesburg in South Africa. We've got organizations like the African Union, and then Wipro. We've got a couple of interesting Ethiopian customers. We've got some customers from Saudi Arabia, including the National Development Fund, as well as in the Ministry of Water, Environment and Water, MIWA. So these aren't just transactional customers. They're major enterprises and institutions that rely on our services for mission-critical operations. Our geographic distribution is strategically designed for growth. So we have 15 subsidiaries in Africa, which provide emerging market leadership. Middle East has 5 subsidiaries. We have 5 subsidiaries in Asia. Europe has 3, and South America currently has 2. North America has 1, and we have 1 subsidiary in Australia. So this provides access to high growth emerging markets, often with lower competitive intensity than developed markets. Our long-term relationships with high renewal rates demonstrate service quality and client satisfaction. As I said previously, a lot of these come from multi-year contracts. And in terms of our managed services business, it's that ability for us to keep signing existing customers, which basically allows us some degree of revenue predictability and strong customer lifecycle value. We're operating in a $1.8 trillion digital market, transformation market, growing at over 20% annually. So our positioning in high growth emerging markets give us access to some of the fastest growing segments of this massive opportunity. So this exceptional customer base and market position translate into consistently strong financial performance. So doing a bit of a deep dive, I took you through some of the Q1 2025 highlights previously, but let's walk through a little bit more of a detailed review into our 2025 Q1 results. So our EBITDA of 15.9 million SEK represents about 87.5% year-on-year growth, which demonstrates exceptional profitability scaling. Our net equity grew 17% to about 144.7 million SEK. And we maintain, as I said previously, a conservative 0.33 debt to equity ratio, which provides financial flexibility for both continued expansion and acquisitions. Our EPS growth shows our earnings acceleration trajectory from 0.08 SEK in 2023 to 0.97 in 2024, and then 0.55 SEK in Q1 2025 alone. So this represents approximately 72% of our quarterly growth. If maintained, this quarterly performance suggests annualized earnings per share of approximately 2.2 SEK, which represents exceptional earnings power and demonstrates our ability to convert growth into shareholder value. Q4 2024 revenue growth of approximately 40%, 39.9 to be exact, which is 83.76 million SEK versus 59.8 million, which is Q4 2023, and Q4 2024 EBITDA growth of 89.4%. This shows consistent acceleration. Operating cash flow of 10.2 million SEK further demonstrates our ability to convert cash into tangible cash returns. Into tangible cash returns. So we're not just profitable on paper, we're generating substantial cash flow that supports both reinvestment and potential capital returns. Our consistent outperformance against our historical targets, exceeding our 12 to 14% EBITDA range to achieve in excess of 16% margin consistently, gives our investors confidence in our ability to deliver on forward-looking commitments. So that Vision 2028 is a commitment, but it's certainly one that we feel investors can have confidence in, given our ability, as I said, to deliver on these forward-looking commitments. Our track record of exceeding guidance provides credibility for these Vision 2028 targets. Now, there's an important misconception about our growth strategy that I'd like to address directly. This slide is titled Strategic Approach We Build, Not Just Buy. And I think for a lot of companies in our space, certainly acquisitive growth does often tend to perhaps play more of a role in revenue projections, growth, profitability than the organic growth that I think we all would like to see in companies we're investing in. So I think it's important to address that point that we feel is crucial to understand our investment proposition. Some market commentary describes White Pearl as a company growing by acquisition, but we feel this fundamentally misrepresents our business model and our strategic approach. The reality is that 80% of our growth today comes from organic startups and internally developed new lines of business, not acquisitions. We have 800 plus global professionals in our delivery network, and we conceptualize, incubate, and scale businesses from the ground up. So our build first philosophy, we have 4 pillars. The first pillar is we build internally. So businesses are conceptualized internally, incubated within the ecosystem, scaled organically with entrepreneurial leadership. And I think that's certainly been our experience, is that the depth of our leadership and the entrepreneurial nature, bearing in mind that a lot of these people have grown businesses and have been responsible for growth across many different geographic areas, different countries, etc. So we feel that's key. I'm just going to say I've got a question coming through. So if you allow me to perhaps just complete the presentation, and then we can see if I can answer them, or if we have to refer you to Peter. So our second pillar is strategic M&As only. So we do acquisitions only when they fill strategic gaps. So by that we mean either accelerating regional access or unlocking meaningful synergies. We don't, as I said, acquire for revenue. We acquire to fill strategic gaps. Our third is cultural consistency. Building internally ensures this is a difficult word, entrepreneurial DNA and quality control across the group. And I mentioned that earlier, and I'd like to think that that entrepreneurial DNA pervades the group. And as I said, we have a very deep pool of skill to draw from in that space. And lastly, capital discipline. So we reinvest intelligently, not reactively. We balance growth, profitability, and strategic focus. So I spoke a little bit about our strategic M&As. So when we do acquire, every acquisition is filtered through one question. Can White Pearl Technology Group meaningfully unlock further growth or synergies? We don't do trophy deals. We don't chase revenue. We just do strategic capability building. So some recent examples of this strategic growth. Firstly, our acquisition of Luminary, or Luminary as we like to call it. Luminary has Nordic market access with about 140 million SEK revenue, which delivers real synergies across all of our groups and is the spearhead of our Nordic expansion. Newport, which has SAP capability enhancement, once again, expanding our SAP capability deliveries in the Nordics and Western Europe, not in this case revenue chasing. And an acquisition that's currently in progress is with Top 4 Marketing, which is based in Indonesia and Australia. And this is once again in line with our Asia Pacific expansion, picking up significant digital marketing capabilities, which once again serve to reinforce the stack and provide access to customers in that space and certainly in that region. So we feel this organic focus delivers superior long-term returns. It's inherently more profitable, defensible, and scalable. It ensures cultural consistency across our platform and provides sustainable competitive advantages that acquisition roll-ups simply cannot replicate. And I think that's the trick here, is in this case, 1 + 1 = 3, not 2. And I think that, in our opinion, has been one of the key levers in our really exciting growth trajectory. So this disciplined approach is executed by a proven leadership team. Now, for some of my execs and colleagues that are on the call, the question is, why am I at the top of the slide? So I think the important thing here is to highlight that our leadership team combines deep technology expertise with proven execution capability. Marco Marangoni, our CEO, is leading this record-breaking transformation with a proven M&A integration track record and a strong shareholder value creation focus. Myself, I lead our AI, data science, and blockchain practice. And basically, that is our proprietary AI platform development, including our cybersecurity subsidiary, which we are currently expanding. I have over 15 years of technology leadership experience, and I'm currently driving that 15% emerging tech revenue growth that's powering our margin expansion through these premium technology solutions. Tony Luden, who's our VP of Nordics, he leads our Nordic expansion strategy, includes our successful Luminary integration leadership and developed market expertise. He ensures we maintain strategic M&A discipline while capturing high-value growth opportunities in these developed markets. So the reason the three of us are there is, A, Marco is our CEO, and I need to keep him happy. But secondly, as I mentioned earlier, from a strategic evolution perspective, our AI, data science, and blockchain, so basically our proprietary AI platform, is the lever that's driving revenue growth through our margin expansion and our shifting away from traditional IT services that are perhaps a little bit more price sensitive, price bound, and moving into our own IP and our own tech gives us a little bit more margin flexibility. So I'm just conscious of time as per usual. So basically, if we look at our strategic roadmap, looking at a few other bits and pieces, let me move on to our following slide because I think that's important. Just quickly, strategic cohesion, not a patchwork. So for a lot of people, our business might look like a patchwork from the outside, when, as I've mentioned, and I hope I've shown, it's a deliberate and cohesive platform, which is built with one goal, which is to help customers become modern digital enterprises. So our 5 pillars, which we spoke about previously, but I think our competitive differentiation is strategy, not chaos, which is this principle of customer-led evolution versus random acquisition. So we've moved away from fragmented point solutions to comprehensive platform. As I mentioned, one of my points is building that platform. We monitor our customer needs across emerging markets, and then we build or acquire capabilities to fill these gaps. So we'd like to think our approach is around coordinated diversity, not chaotic collection. Just lastly on our investment thesis, and I think just one point to pick up here, which is our 5.8 times PE versus 31 times in our peers. This 80% PE discount to small cap peers, a debt-free balance sheet, 18% EBITDA margin stabilized, and a path to 20% margin expansion, we would like to think that plus our debt-free profile, our strategic differentiation, some of our value unlocking, our earnings-driven philosophy, as well as then the opportunity for us to move from foundational growth to value realization. And we do this through operational excellence. Lastly, just a slide on some of our subsidiaries. Please feel free to have a look at our website, and you'll obviously be able to see some of those there, as well as then a little bit more about the organization and who we are. So thank you. We're building the future of digital transformation through organic growth, strategic innovation, and disciplined execution. We'd like to invite investors on this call to join us on this journey, potential investors. And our investor relations team, led by Peter, is available for detailed follow-up discussions. So as mentioned earlier, please book and we can move that process forward. I'm just looking at 2 questions, one from Skip and one from Alex. I'm not sure, Janelle, if I have time to just quickly look at them. Competitive environment, how you win. Discussion, sales channel, and the length of the sales cycle. So let me just have a quick look at Alex's. Sales channels, I think given the fact that we have 32 subsidiaries, basically makes each of those CEOs, salespeople, an extension of our sales channel. I mentioned earlier that we like to build products from scratch. We like to incubate, incubate, and obviously build from there. So, each of those organizations becomes an extension of our sales channel. Our sales cycle, I think it depends obviously on the products. If we look at some of the more faster moving digital marketing type products, we potentially looking at weeks, perhaps up to 3 months. And then on some of the more sophisticated AI, fraud management, some of the ERP type implementations, those sales cycles can be anything up to a year. We do sell multiple services to customers, and obviously we have that. Okay, I've been told to wrap up. So Skip, I think Peter will be able to help you with your question. I'd just like to thank everyone for the opportunity. Janelle, sorry for overshooting by 5 minutes. Yeah, thank you very much for your time. Much appreciated. And I'm hoping we'll see you very soon on our investor list. Thank you again.